Yes, guys. Welcome to a new week. It is time. It is time for some profitable trades this week. I'm very looking forward to share this with you guys right now. It's a new week. We have everything figured out. We have our trade setups ready. All right. We know exactly what we can do. We're waiting for the right setups right now to play out. In the end, we cannot force a trade, right? We have to be patient. However, to start off good, to start off the right way, we can already look at a pair right now and trade this very soon. And this is the Swiss franc and the Japanese yen. I was not mentioning this yesterday, however, I realized that there are way more options, way more setups than I initially thought. So therefore, it's good to reflect, to go over all the charts one more time. And based on that, actually make a trading decision. So right here, we have the Swiss franc against the Japanese yen right here. And we're seeing a rejection right now on the 4-hour chart. We have a ton of imbalance here. We discussed this on the Friday stream already. We expected the Canadian dollar being a little bit weaker than the Japanese yen. Sorry, the Swiss franc, my bad. Than the Japanese yen. So all in all, we're on the right track right now. So we had a beautiful rejection here, however. We're gonna wait for a confirmation in this case. We're gonna get here very soon. All right. Hope you guys are all had an amazing weekend. I feel that some really good trade setups are coming up right now. There are tons of trades already almost ready. However, we need some more volume. And I think when the London session will open in 1 hour from now or 30 minutes from now, we're gonna get the volume that we need in order to make a decision. That's why we cannot force a trade right now, because we know we don't want to trade the exact opening of the London session, right? We want to wait at least 15 minutes, 30 minutes, 20 minutes, roundabout, before we actually open the trade. So one more time, I'll explain you why I'm looking at this trade setup right now. We're gonna go over all the trades. We have all the trade setups right here. We're gonna go over every single one of them and just update the status of these particular trade setups right here. And then look from there, right? However, we still have the Swiss franc. And I'll show you exactly what the targets will be. Look at this high also, right? Weakness on the charts right here. Selling power is decreasing. However, you do not want to trade right now until the London session has completely opened. Because sometimes the Asian session or the London session manipulates the Asian high, right? So we want to avoid that. We want to make sure that London opened first to see what actually happened, right? And I'll show you why. This is the Asian session. This is the exact high of the Asian session right here. We want to be extremely careful right now. Because it could definitely just turn around, manipulates the Asian high to then eventually come back down once again, right? Still in this supply zone right here on the higher time frame. Good morning, Praveen. Good to see you once again, brother man. Hope you had a great weekend. USD cut. Yeah, we have a look at all the pairs. We're gonna look at USD cut for you as well. Let's do it right now. We're gonna start soon, guys. We're just warming up. We're just warming up. Okay, the first thing I see, and what I always do, I do not look at, you know, supply and demand. I always start with liquidity, alright? So liquidity in the market is the most important. How can we identify liquidity? Well, we can look at equal lows, equal highs, trend lines, consolidation areas, right? Or areas of consolidation. Beautiful area of liquidity right here. Equal lows, right? Taking out these highs, now coming back down. We filled up this imbalance here. I think it induced a lot of people to go long in this range right here. But what's happening right now is clearly that we're actually breaking through this demand without remorse, right? So the people that went in here, they probably will get stopped out right now. And the reason why is because there's liquidity underneath. Right here. Because the people that entered in this equal low, right? Remember, this is a 4-hour chart, right? We can go to the 1 hour. People went in this area right here. People went in this area right here. Where are they putting their stop loss? Of course, right here underneath, right? What do we see here? We call this an area of imbalance as well. We can see clearly that this wick right here is not connecting to this wick right here, which causes an inefficiency in the market, which causes imbalance. So imbalance is the key, right? We have this tool again. We went over this yesterday as well. And you can see exactly where the imbalance is right here. We left some imbalance here, so this gives us a great reason to look for higher targets once again. However, there's a lot of imbalance underneath the chart, right? Keep that in mind right now. So be very careful with entering any position right now. We can potentially look for a short position for USD. However, we will probably need to fill up this imbalance right here first in order to do that. And it's actually a good sign that we're breaking through right now, because that means that we can get stopped out right here, or the people that went long here can get stopped out. We can retrace, then come back down to fill up this imbalance and the liquidity right here, right? So this could be a great entry for us. However, it can just easily go through right now. We don't know that, right? We're not gonna gamble. We're gonna wait for the right opportunity. And that is a beautiful retracement. Maybe something else, So check this out, right? Number high, a second high. What could this be? Wait, let me make it a bit more clear for you guys. We call this, how do we call this? We call this a head and shoulders pattern, right? So it would make a lot of sense to complete our pattern, which is the key definition of a reversal, the head and shoulders pattern. So if we do manage to break this pattern right here, or to fill up this pattern, we will find our perfect entry. The reason why is because we right now will get the people that went long here stopped out because we're seeing a higher high. But if you look on the higher time frame, you know that we are extremely overbought already. We're seeing weakness on the RSI. Alright. Going on the 4 hourly. Yes, we broke a high. That doesn't mean that we can look for a long right now. No, because there's liquidity underneath. There's imbalance underneath. So that's why I say I never look at supply and demand first. I always look at areas of liquidity and imbalance before I start looking for potential supply and demand areas. This is the key difference. This would completely, completely fill up our head and shoulders pattern right here. So this is a very, very good sign. But we need to wait for a lower low right now, right? We need to wait for a lower low of at least this range right here. And I'll show you exactly why. This area. The key is to go underneath this area. We don't have to go down all the way. If you just, show a wick under this area, most likely we will stop out most of the people that went long here, to then come back into our entry because we created a lower low, right? We have our confirmation. Then we can come back and look for an area. This would fill up our head and shoulders. It's free to enter. I will give you guys all my updates in there. Keep in mind, every Sunday we create a live stream, a Sunday live stream where I discuss the market breakdown. I go over every single pair just before we start this week, so we know exactly what to expect. However, if I cannot make a live stream, I will make a 5 or 10 minute video to just go over all the charts right there, and I'll put it as unlisted. That means that I will only put the link of this clip YouTube video in this Discord channel right here. It's completely free. You can share your setups in here as well. We can go over your charts, we can improve together, and we can discuss everything in the live stream as well on a daily basis. So yeah, I just added the EJ right here. And the reason why is because I messed it yesterday as well. And this is a beautiful, beautiful setup. Because, what did we see here? We saw a beautiful area of consolidation. Beautiful area of consolidation right here. We saw a break of structure right here. We're seeing the imbalance getting filled right here. Slowly, but steady. Yes, we're forming some resistance right now from this demand or this supply zone. The reason why clearly is because we formed a drop, base, drop right here, right? However, what do we notice? Well, this is under the equilibrium. When we draw the fib levels from this area to this area, from this high of this consolidation area to this low right here, you know, because we broke structure, we can see exactly the equilibrium right here. So if you want to know the equilibrium, well, please take a screenshot of this area. I have a link in the description as well. Just copy this Fibonacci because it's super important for you guys to have as well. If you have it already, great. It pretty much determines if you are buying or selling for a discount or a premium. You want to get into the position for a discount and sell it for a premium, right? Either long or short. Therefore, the 0.5 is the most important zone right there, right? This is the middle of the equilibrium. It's 50%, right? If you are above the equilibrium, well, then you have your consolidation area with you. Then you can actually look for potential entries without any worries. You can look still for confirmation entries. The higher, in this case, the more aggressive I tend to take my trades. And with a higher, I mean the 79, the 88, etc. The 60 to the 70, I would look for confirmation. Sometimes I would look for aggressive entries too. There are always exemptions, right? The reason why is because there's maybe sometimes liquidity built or imbalances built just under that supply zone. So we can take that in consideration. In this case, however, we're seeing something else, right? We're seeing that clearly there is imbalance above this zone and we're under the equilibrium. So that's very, very important. However, we are entering the zone right now. Trust me, a big chance we're just gonna break through right now. And the people that go short right here get stopped out. If it's not the case, you can look for confirmation entry, but be very careful, okay? Be very careful. Yes, we have an area of liquidity right here. We have a beautiful trend line. People put their stop losses right there. However, we want to at least trade from above the equilibrium in this case. Well, if it's possible to send the Saccharine on the channel when entering a deal. Yeah, I think what you mean is whenever I actually go into the trade, I will let you know, right? Yeah, so if I see the opportunity live on this stream right now, we're gonna be streaming for a while, then I will let you know instantly whenever I enter the trade. Of course. If I do not see it and I'm not live, then I will post it in the Discord nonetheless, right? Regardless. So yeah, another thing with supply and demand, something that I really bothered, or what really bothered me over time was, how can I find the right supply zone or demand zone, right? Why this one and why not this one? Well, this is pretty much why the Fibonacci is so important. I don't use it for any take profit situations. I only use it for my entries to see where I'm at in the market, right? And what I always do is I look for a broader range of consolidation. And then I start at the top of this consolidation range to the bottom of the breakout. Okay? When we're creating a break of structure right here, and we're seeing the bottom and we're seeing a reversal coming into play, this is the moment I draw my fib to see where we at. So if you want to know, why not this one, but why this one? Well, this is one of the reasons. The other reason is there a liquidity of imbalance above that zone, right? And in this case, we see a lot of imbalance here. And imbalances tend to get filled up. So this is another confluence. This is why I should be more careful as well. So now we have the Fibonacci against us. Now we know that there is imbalance above this range, right? These are the two major reasons why we should not enter right now. So this is the main reason. This is the main reason for EJ right here. Then we had, like we discussed yesterday in the stream as well, the Canadian dollar and the Swiss franc. We're waiting for two options, right? Just want to go over it once again. I want to make sure that you guys see the screen. I saw in the last stream that I was a bit lacking in this way. I'll make sure that you guys have a good, visual. So yeah, we expected at least the price to one time, at some point, at least come back down here to test this demand zone right here. The reason why is because we have a beautiful area of liquidity and this area of imbalance right here. This works like a super strong important magnet towards, institutional investors, etc. Also the algorithmics, quant traders, they are all looking to fill up any inefficiency in the market. So imbalance and liquidity is the ultimate combination to do so. Right, we know that there are a lot of stop losses there, we fill up a gap and we then move forward, right? So that's why we said in the last stream, if we tend to break this area of trend right here, because we know that a lot of retail traders went into this range, right? They entered here, they entered here, they entered here, they entered here. They're putting the stop losses right there, right? So a lot of liquidity there, a lot of liquidity down there. So we need to know now exactly, my bad, the two options we can expect. So option number one is either we break down towards this range, come back into this demand zone, looking at this range right here, right? Filling up the imbalance right there. And then move back up to fill up the rest of the imbalance because we saw a beautiful area of consolidation here. Beautiful area of consolidation, expansion, retracement, right? Then we go long here. We will go long at 73.215, 220 aggressively. Stop loss at 72.889 or 890. Very strong candle as well. That's option number one. Option number two is we fill up the imbalance already, right? We just skip this part right here. We fill up the imbalance. Huge inefficiency in the market. Everything pretty much aligns, right? We have the point of control of this area right there, combining with a beautiful supply zone. We have the 79 Fib aligning perfectly with both areas. We have imbalance above this range, and we have a tiny bit of liquidity already here built up. So option two, we go up straight away. We go short aggressively right there. We start at 77.175, stop loss 77.505, right? Would give us round about a 30 pip stop loss, a 12 to 1. So these are the two options right here. Can we look for potential re-entries? Absolutely. We can definitely look for potential re-entries in the market once we've gone in aggressively. In this case, for the Canadian dollar and the Swiss franc, we can potentially look for potential entries in the market. And the reason why we're going to look for re-entries in the market is pretty much because we look on the higher time frame. We want to experience, right? We want to secure our aggressive entry. Once we're seeing weakness on the lower time frame and we're seeing a break of structure right there, then we are looking for a potential confirmation entry on the lower time frame. Once we entered our confirmation entry, our aggressive entry tend to be above our confirmation entry. So then our aggressive entry will instantly go to break even, and then our confirmation entry will have a stop loss right there. All right. Then again, the next re-entry. And again, and again, and again. At some point, we're gonna move our stop losses down, 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 right? Every time we re-enter, we move our stop loss down. So our aggressive entry will now be at the stop loss of where the first re-entry was, and so on and so on. So at some point, we're gonna experience this together. We're gonna have the perfect trade. Everything aligns with the time frame, and we have a trade live. And whenever we have that trade live again, and we see the opportunity of going in for a re-entry, I will show you exactly what I mean. This is one of the best effects for me personally, what have been working for me very well, is looking for potential re-entries in the market whenever we can. This is how you can scale your portfolio relatively fast without risking too much, right? You don't have to put a massive trade in. You can stick with the 1% risk, but because you're scaling up, you're securing your first trade. Therefore, you're pretty much risking the same. But your positioning is double, or triple, or quadruple, etc. So I hope you guys liked the idea that we're gonna do this live. Thumbs up if you like this idea. Would be highly appreciated. We just started on YouTube. We were always streaming on other platforms. So now we move to YouTube. We start from the beginning. I'm very, very excited to share everything with you. I will stream from Monday to Friday. Sometimes the London session, sometimes the New York session. And I will share all my charts in my Discord channel as well. So then we have an entry coming very soon. And this entry is for the US 100, right? For the Nasdaq right here. And the reason why I like this entry a lot, yes, we have imbalance here. That's why we're gonna wait for confirmation. Yeah. However, beautiful liquidity build up here, right? On both sides. Stop losses obviously are just above it, especially when we went down already and people didn't take profits. Yeah, then they're putting their stop losses right here or on break even already, right? So there is still a small gap that needs to be filled here. It's a tiny gap, but it is definitely a gap that needs to be filled. All right. If we are entering the supply zone, we're waiting for a confirmation entry on the lower time frame. The reason for that is the same as we just discussed. It is because we're seeing imbalance here above it. We're seeing area of consolidation here as well, right? What do? We take the high of this area of consolidation. We draw it to the low. Beautiful area of supply right here. Extremely premium area of supply. Beautiful area to look out for. All right. In my opinion, I would target this demand zone once again. So if we enter this confirmation entry and this works out, we're seeing the weakness here. We're seeing a confirmation on the lower time frame, right? Again, 15-minute chart, 5-minute chart, whatever you prefer. Let's say this is our last low. We come back up. We break this low, right? We create a change of character right here. We call this a change of character right here. You can either do two things. You can draw the fib again, look for a zone above the equilibrium, or, you know, above the 70.5. Look for a supply zone in that area right there. Let's say you find it right here. Then boom, you found your zone. Okay, re-entry, or your first entry in this case, because we start with a confirmation entry, right? Target down there. Liquidity is built up underneath. You know, we already have multiple touches on this demand zone right here as well, right? Let me go down. So beautiful, beautiful trade. Extremely high risk reward right here. You can take profits along the way, right? This is up to you. This is your personal preference. I'm not forcing you to, you know, take your profit there. This is up to you. If you're happy with less, then be happy. Make sure that you have at least a 3-to-1. So this is the way we do it, right? We wait for a confirmation entry. In this case, we wait for a break of structure. What happens? We come back up. We tend to fill up this gap right here. We come back down. Again, head and shoulders. So this is how we look for head and shoulders patterns, right? We don't look for head and shoulders pattern just by looking at the pattern. No, we look for the psychology behind that pattern, which is, of course, a break of structure or a change of character right here, creating a lower low, coming back into a supply zone, right? And then entering the trade. This would give us the lowest risk against the maximum reward. And the reason why we want to wait for the confirmation trade one more time is simply because, of course, we have liquidity, or sorry, an area of imbalance above it, and an area of consolidation right there. Russ, welcome, brother, man. Can you please show the GJ chart? I'd like to see analysis on that as well. Okay, sure. So for GJ, I had this trade open. I closed my trade. I was too late with closing my position. I closed it already 50% in profit. I put the rest on break even. Already I was safe no matter what. However, I closed the trade. The reason why is because I realized there is tons of liquidity build above this supply zone right here. The imbalance is filled, so we would expect to come back down, right? Because there's also liquidity here and here. However, we still have a beautiful area of consolidation here. And we have liquidity build up here right now. The stop losses are here, right? The algorithms love that. They love stop losses, right? They love to go for the market, go for the liquidity, and so on and so on. So what do? Well, simply, we go back up. Probably come into this area, right? We already have multiple touches, by the way. Keep that in mind. We have multiple touches on this area of supply here right now. So should we enter the position? I would be very, very careful with entering a position unless we're creating weakness on the lower time frame. All right. However, at some point, we could potentially expect to come back down. All right. We could grab the liquidity right here and then come back down. We need to break through the supply zone. The reason why is because this resistance will now turn into support. So we need to break through the zone once again. show more weakness, we come back up, and then come back down. Then we can look for a potential area of entering right there. In combination with, you know, the liquidity right here, area of imbalance right here, liquidity build up right here. Tons of reasons to go back down. All right? So be very careful with entering right now. So again, the US 100, the S&P 500 is very, very similar. All right? What I do like about the S&P 500 in this case is the fact that we're seeing an area of liquidity here getting built up. A lot of shorters got induced to go short relatively early, right? Putting their stop losses right there. What else do we see? We saw, of course, a beautiful area of consolidation, followed by a massive dump, creating a break of structure right here, leaving a lot of inefficiency in the market, right? A lot of imbalance in the market. Therefore, we want to fill up the gap right now. And there is nothing better than seeing liquidity just under a supply zone in combination with the imbalance. We can still use the last high of this consolidation race to the low. We can look for potential setup, right? We are above the equilibrium. Therefore, we can look for a nice area of, you know, going short right here. So in this case, I would personally go in aggressively. However, again, same scenario. It's a bit different than the US 500 because this gap is relatively big. However, be very careful because there's still an area of imbalance above it. A beautiful area of consolidation here. Here I would definitely go in aggressively. Here I would go for a 0.5% personally. And then 1% here as well. If we do tend to just break through. Right? I would take the gamble right here personally. This is no financial advice. Personally, I would do that. We have Oleg in the chat. My bro, what's up, man? Hope you had a nice weekend. Just to clarify, we're going live right now from Monday to Friday. We also have our Discord channel right here. Right? We're posting all our mentor charts in there for free. Everything completely for free. You guys can come in here, join. You can share your charts in this channel as well. I would love to discuss your charts whenever I'm not live. And just to analyze your charts, to see if I can help you in there as well. And to see what we can do. We have the crypto setups right here. We have the Forex setups right there. We have the mentor charts right here. All the announcements of my stream will also be there. And every Sunday I will make a breakdown video explaining you exactly all the setups I'm looking at for this next couple of days. So pretty much for every single week. If I cannot do it live, I will create a video, upload it unlisted on my YouTube and share the link in this Discord channel. So feel free to join my Discord right here. And we move forward from there, guys. Links in the bio. I thought you are ignoring me. I would never ignore you, brother. Just seeing what trade I can steal from you today. Well, we have a beautiful, beautiful setup today. We are seeing a beautiful things I'm looking at right now. By the way, I have to talk about this guy. He's in the chat right now. This guy is actually was a great inspiration for me personally. I learned a lot of setups from him. I learned a lot of pretty significant strategies. Of course, we kind of have our own style. However, I learned a lot. I learned a lot from him. So the support is real, guys. The support is real. So as you guys seeing right now, like I said, we expected to break through the supply zone right here. The reason why is because obviously we're seeing a huge gap of imbalance here, right? We were also under the equilibrium. A lot of people that went short here obviously got stopped out right here. Because they're putting their stop losses right there. Let's see what happens, but most likely you're gonna get stopped out right now. Keep in mind the London Open is right now, guys, so we're going to manipulate the Asian high or Asian low. Let's see right here. Of course, in this case, we had the Asian high right here. The London session tends to manipulate the Asian high or Asian low, right? In this case, it manipulated the Asian high right here. Sometimes it just comes back straight away to then manipulate the Asian low. However, be very careful for all the particular reasons I gave you earlier as well. We're seeing the volume increasing. Right, same for GJ right now. Like I said to you guys, I went out for this particular reason. The reason is because there's liquidity build up right there. Let me know if I can look a chart up with you guys. I'm very, very excited to help you analyze or help you with the analyzing of the charts. Today, not really much going on. The euro is not doing that well as expected. We have the Canadian dollar, nothing crazy. We have the British pound. It's pretty basic today. Pretty basic today. Tomorrow, we have the Australian dollar. Okay, we can take this into consideration. Just to give you guys a perspective, I do not trade news, alright? However, we need to know what's going on. If there is some releases, some forecasts, some whatever news coming out. Because it definitely has an impact. I do not trade news. However, we need to know what's happening every single week in Forex to make sure we do not get stopped out randomly whenever the news comes out. Right? There are so many algorithmics or algorithms, so many institutions trading on news. The moment it comes out, they already have it programmed and boom, they stop you out. So therefore, we need to take that in consideration. Try to avoid trading news. This is what I personally do. Some people like to just trade on news. I like to trade on technical analysis, using news as a reason to avoid the market. So again, if you want to make sure that, you know, market makers or institutions are real, I'm going to show you some content very soon. However, you see the perfect example here, right? We saw a beautiful equal low. We saw a leg up to fill up this imbalance right here already. To rapidly then take out the lows, to then go back up again. This is the most typical, you know, liquidation hunt or stop loss hunt you will ever see. And you will see this all the time. That's why I cannot repeat it enough, is by saying, whenever you look at the chart for the first time, guys, don't look at supply and demand straight away. Look at areas of liquidity and imbalances in the market. Then look for supply and demand. Then look on the higher time frame. Then look for all these other factors, right? Another beautiful area right here. We didn't discuss this one yet, but this is the Australian dollar against the US dollar. Typical trendline liquidity built right here. Tons of stop losses underneath, right? No imbalances here. Little imbalance right there. Nothing crazy. What tends to happen right now is that most likely we need to see first a higher high getting created, right? Let's say we're creating a higher high here. Then would I go long? Yes, absolutely. I would go long here. I would look for an area of demand. Could be this area right here. Let me check. This area right here. To then look for high targets right there. The reason why a lot of traders are trading trend lines, right? A lot of retail traders are going short here, going short here, going short here. Where are they putting their stop losses? Right above it. We need to create a higher high first though. So let's wait for the higher high. Ross says gold against USD. Okay, let's look for gold. I haven't seen that for a while. So gold. At this particular moment, in my opinion, gold looks extremely weak. It was very, very hard to trade personally. The reason why is because I do not see a clear... I did not see a clear retracement at any given moment. Not long, not short. Definitely no signs of any long positions right now. Also, be very careful right here. Yes, there's imbalance here. Tends to get filled up right now. However, I don't see any reason to go long right now. I don't see any structure in the market that tells me to go long. Therefore, we're gonna go back up right here, most likely. We could potentially look for a retracement here, however, again, a lot of imbalance above it. We have a beautiful area of consolidation that remains untested as well. So, this is way more appealing to me personally. This area right there. Can this still take a while? Absolutely, this can still take a while. Potentially look for a confirmation entry. Could be. Could be. Okay, let's clean it up. Oleg says, check GU and tell me which position I'm in and where I will TP. You know my style. Okay. Well, first of all, we have two areas of consolidation. This is like a consolidation I really like. But I need to think from your perspective, right? So I need to really, you know, figure out what you think right here. So first of all, we have an area right here. However, it's pretty far away. So I don't think you mean this range right here. Maybe you take this area of consolidation from this range right here. Take profit at volume area high. Long at volume area low. Take profit at volume area high. Tell me if this is correct. And guys, this is not my personal style, right? This is a style of a friend of mine. I want to know from him if this is exactly what he means. So most likely he came back down, come back up. Okay, start with the daily. Okay. Okay, if you look from the daily, we saw a bounce from this demand zone right here. Most likely went long right there. Then we saw this area of consolidation right here. We're seeing imbalance right here. First TP right there. Second TP right here. You tell me. Let's see. However, in this case, guys, I would look for a confirmation entry right here. Look for a lower time frame, you know, higher high first. We bounced off a very nice daily support or daily demand zone right here. However, it would be great if you can at least come back down once again to enter, then, you know, move forward and then take a long position, right? Potentially this demand right here. Okay, man. Please share your screenshot of GU in the chart on Discord, and I will take it on the screen. I will analyze it for you. Oleg, you can do the same thing. Yes, my decision too long was based on the daily zone. However, the entry was found in a lower time frame after 4-hour break of structure and liquidity hunt. Yeah, exactly. Would be great if you can share your chart. We put it on the screen. Because yeah, definitely we're looking for long. However, we were waiting for a confirmation entry right here. So we have this area of demand. Beautiful area of demand right here. On the daily, we bounced from this area. You're looking for a break of structure right here. Then I personally would wait for the retracement to then look for a position right there. What's your thought on the Swiss franc against the Japanese yen? Well, first of all, I've been looking at the currency indices, right? So, to give you guys the full perspective, so I was looking at the daily, right? We're massively going up right now. And it seems that we're creating a lower low right now. We're not sure yet, right? However, tons of liquidity build up right here. Tons of liquidity build up right here. A lot of imbalance filled up right here, right? There is a big chance that most likely we could come back down to fill up this gap. To also go for the liquidation hunt right there. All the stop losses are right underneath. Right here. Right? The other side we can look at is the currency indices. So we can look at the Canadian currency indices right here. And it looks a bit messy, right? But the goal is to just get a briefly understanding of what's going on. So we actually came under this area right here, and now we came back above it, which is a relatively good sign. So the Canadian dollar currency index is potentially coming back up here, but we're not sure yet because we don't see the daily confirmation of this candle closure, right? We can easily come back down once again. We need to wait for confirmation of closure of this candle right here. Then looking at the Japanese currency index. Was I just looking at the wrong chart? Is this really what's going on? Let me see. No. Okay, we were looking at the right chart. I was looking at the wrong currency index. Okay, perfect. So looking at then the Swiss currency index right now, we're still seeing a gap right here that has not been filled completely. Potentially we can come back down first, test this level one more time to fill up this gap, and then move further up very quickly, right? Japanese currency index, potentially also we can come back down right here to then potentially bounce from this range right here. So they look quite similar. It looks quite stable in my opinion. They're both relatively similar, right? So if we then go to the Swiss franc and the Japanese yen right here, we're seeing a lot of liquidity build up right here. We're seeing a rejection of this area of supply. However, it's a second test right here. That's why I want to see a confirmation entry right now, right? This was actually a beautiful area of consolidation though. We broke structure right here. So you could say this is the first touch. However, we want to wait for a confirmation entry on the lower time frame. Right now, we're still bouncing off this demand right here. So what I would like to see is that we actually come below, to then retrace, come back up, to then look for potential entry down, right? Which on the higher time frame would then give us a beautiful entry structures right here. Bro, I couldn't see the numbers on the screen. Can you send the graph by numbers on the channel? Yeah, sure. You're talking about the Swiss franc against the Japanese yen? So we're actually seeing a bounce right now for EU. Let's see for how long. But for now it looks that we're seeing at least a small relief bounce from there. It kind of makes sense. We actually came under the dollar. Can you believe that? We came under the dollar right there. Beautiful. And there we go. So right now the EJ is definitely a trade I'm looking out for. If things are moving fast, then it could happen today. Let's see. Volume is slightly increasing, but nothing spectacular right now. Let's see what happens when this candle is closing. So EJ, high on my list right here. So this was Oleg's entry for GU. We saw massive support on the daily. Massive demand zone. We saw a bounce from this zone. We went up. Came back down to fill up the imbalance. Literally sniped the entry. And now it's moving back up. Beautiful entry. So we have killers in the Discord channel, guys. We have killers, alright? Keep that in mind. You're not alone. You're not alone. This is how we should do it. We should do it together. Okay, right now, guys. I quickly want to go over a video with you guys. And the reason why is pretty much because I just want to do some mindset as well. We're gonna find our entries, no worries. Whenever we find an entry, I have my alerts ready. Once something is popping up and we're entering a trade, I will let you guys know. We'll go straight back to the charts. However, I just want to go over a video with you guys. And, you know, we're just gonna go over and do some mindset as well. Because I think it's very, very important to not forget mindset. I mean, the biggest mistake I made personally was not focusing on mindset. And I give you one example. Whenever you start trading and you're interested in trading, etc., and you want to look for potential trades, right? And you want to look for potential mentors, people that can teach you how to trade, you probably come around and buy a course here and there, right? Not everyone does it. There's tons of free, very high quality content on YouTube as well. However, I personally, you know, I wanted to buy a course. So I bought a ton of courses, etc., to get better, to improve myself, which is an investment in myself, right? And in every single course, the first thing that you see there is a mindset section, a motivational mindset section, right? Talking about mindset, how important it is, etc. And when I started trading, I was like, yeah, right. The mindset thing, you know, I skipped this part. My mindset is strong. My belief is good. I know exactly what I'm doing. Wrong. Totally wrong. You need to work on your mindset as well. And the reason why I'm saying that is purely because whenever you know, have a few good trades, very, very solid trades, then you tend to go into the euphoric stage, right? Where you feel like, hey, I am an extremely good trader. Everything is going my way. Perfect. I can do this. You happy? You have an amazing sleep. You think, ah, man, I'm going to rock it tomorrow, you know, again. And you do it again. Same thing happens again. Building up your confidence even more. And then the third day, you lose a trade. Okay, that's fine. You can deal with that. Again, you lose another trade, right? We talked about this in the last live stream. Probability game, right? This is an area of probability. You cannot win every single trade. However, you did. You lost the second trade too. Now you start to get worried, right? Now you start to doubt yourself. Now you start thinking about, hey, is my strategy not good? Or in general, is it me? Or, oh my God, no, it's probably not. It's just me. Let me make the money back as soon as possible. So what do? You increase your risk. You potentially, are going to change something about your strategy. And you keep adjusting your strategy. And without literally a few days later, you completely lost track of it all and you want to give up. And I went through this stage many, many times. This is common. You have to go through this stage, in my opinion. And the problem with changing up your strategy is that whenever you want to change up your strategy and you change one thing or you tweak something, and every 2 trades you tweak another thing, there is no way you can find out if that thing that you tweaked at first actually already made the difference. Therefore, you need at least 10, 20, 30 trades before you change something else. And that's why it takes time before you become a profitable trader. And it's not because your strategy is not good. No, it's because you need to filter and narrow down your strategy over time. So that means that you do 10 trades with one strategy. Okay. Then you want to tweak something. Okay, fine. You tweak something. Then again, 10 trades. You tweak another thing. And you keep tweaking until you narrowed it down completely and you're happy with your strategy. Right? The other thing is a fear of loss. You have to accept that this is a probability game. You cannot win every trade. Poker is the same thing, right? Poker is gambling. However, there are factors in this game that you can create an edge over other players, right? However, that doesn't prove that you can win every hand. No. You can win 51% of your hands, so over time, you will win 51%, so you make profit. Same counts for trading. Therefore, I highly recommend you to work on your mindset as well. Don't just watch this video or this live stream, just follow up with these strategies and stuff. And we're going to go over everything. However, keep in mind that the biggest losses eventually still come from trying to make your money back to excessive risk or by adjusting your strategy relatively fast. So what I want to do before we continue with the stream, I really want to go over this video with you guys real quick. And this is the top 10 reasons why Forex traders fail. And you know what? I haven't watched this video myself. I got this video recommended by somebody else. So this is the first time I'm watching it. So let's have a look at it.
Why do so many people give up on Forex trading?
Great question. I think it's twofold. If you look at the person internally, I think our culture these days is, a friend of mine, an American guy, uses the phrase like a microwave culture, is this, you can buy a book and in minutes you've got it on your phone. I think subconsciously we are very used to getting what we want very quickly, and Forex takes hard work, and I think, and it's also externally it's marketed as not so much as it used to be. I can remember when I first started out, everyone was marketing the get rich quick scheme. There's still people out there doing it, but there's less of it. So I think if you combine the fact that internally
instantly, the number one rule. I straight want to get into it, guys. That whole get rich quick scheme, right? Forget about it. You have to go through it all. You have to make the mistakes. You have to really, really try to experiment, to work. It doesn't make any sense to go with all your money in from the beginning, start slow, etc. But use money. right? You want to get some emotions involved, but experience it all. There is no way you can become a successful trader. And there are so many guys that are sending you this get rich quick scheme, right? All these lifestylers on Forex, multi-millionaires and stuff with their lifestyle, etc. I mean, it's cool. It's definitely motivating. It's definitely motivating. And I love to see these guys. However, accept the fact that it is not a get rich quick scheme. You have to go through it all, okay?
We are used to getting things very quickly. And externally, the fact that there's this idea you can have a 90% win rate, or come and trade our strategies. It wins 90% of the time, or you can be making money very quickly. And then thirdly, the fact that you can place a trade. So the rank amateur can come along, sit next to me. We can he can press buy with no skill. I can press sell because the strategy suggests sell. I lose. He makes money. So he's sitting there thinking, well, hang on a minute, this guy here, what does he know? I've just
probability.
Over leveraged without realizing it and risked 50% of my account. I've just had a 3-to-1 winning trade. I've practically doubled my money. So those three factors I think influence. And then when it goes against them, people suddenly realize how little control they have. And I think that's what scares people. So they go, oh, and with the way the world is, you could turn around and go, well, I'll go and do property, or I'll go and set up a business, or it's very easy to look at another avenue. And I think if people looked at this more as they would look going to university, not that you don't necessarily, you can make money in quicker than 3 years. I have students that get consistent within 6 to 9 months. But
so just to clarify, probability goes against human nature. All right? You can literally have zero experience in trading and still make money, right? And then you're like, what? I just made what, 30, 40%? Not knowing that you were lucky, right? But you made money. The key is of trading that you know exactly what you are doing and that you are doing it on a consistent basis. And therefore, you know exactly, everyone can make money. And this is how the market fools you. You get confident too quick because you think, oh, I made money at the beginning, so I can trade now. That's not how it works. So therefore, you have to go through it all. And this trading goes against human nature, right? Therefore, we have to rewire our brains, accept some factors about trading, move forward with that, give yourself time to get better. Leverage, for example, these live streams, right, where we discuss the charts together. Look for community-driven groups where we can share, where we can learn from each other, and let's move forward from there.
even if they get consistent 6 to 9 months, they will have a spell where that consistency will drop for a bit. So I think that's the thing. I think it's an internal and external.
That would be a really interesting course, right? A university degree in trading.
Yeah, and interestingly enough, there are training companies out there that are promoting the way that they do things more so that way. So I say to people, I always get asked, how long will it take for me to get successful? And I say, well, it's a question I can't answer. And first you've got to define what success means to you. If you're saying to me, I've got £1,000 and I want to be a full-time trader, well, you want to be looking 5 years, 10 years out from where you are. But if you've got £100,000 and you're looking to make 1% a month, then you're going to probably get to success more quickly than the other person. So, but I do say to people, treat it, look at learn the skill, because once you've got the skill, it's more about then the money's less important. And to become a successful trader, you have to focus on the money, but you have to focus on the money less. So if I sit and think, all I think about is how much money I'm going to make today, I'm less likely to be successful than if I think about, is my strategy setting up? Can I trade that strategy?
So it's interesting talking to you, because it sounds to me like you almost enjoy just as much the financial reward as you do when seeing that your strategies play out. Like that, does that give you an equal buzz when you're just like, I knew that this was the way to do it, rather than there's my cash? It's
fun. That's a really, really great observation, because for me, I have to be money motivated. I am money motivated. I like nice things. My partner likes nice things, and I don't think there's anything wrong with that. But if I purely traded for the money, then I would be getting in and out of trades based on whether there was, £1,000 profit today as opposed.
Exactly. So trading for the money, it's good. Of course, we all need to make money, right? And we all do it for the money. So we can use that mindset and exactly know that we're doing it for the money. However, just keep in mind that it's actually really fun as well. It can be really fun to work out the strategy, to test this over time, and to just grow with your strategy, to improve your strategy, and to then eventually become a trader from there on a consistent basis, have the structures in play, and then the money will come.
500. So for me, I like the fact that I have to become less money focused. I have to have the motivation to trade for money. I'm not doing this for fun, but I like the fact that there's almost a polar opposite in that I have to become less focused on the money to be successful. And I've developed a curiosity for trading and a passion for it. But on the same breath, there are people that are interested in trading and passionate about it, but actually need to be a little bit more money focused because they're doing it too much for the love and the intrigue and the curiosity factor, and are not hard results enough. So everybody's different.
How do you prevent winning trades turning into losing trades?
Great question. I don't have that objective when I set out on a trade. So for me, I'm either going to what's called leg out of a trade, so scale out of a position. So maybe you have 2 or 3 targets. I may potentially scale into a position. The most complex I'll get is when I'm scaling in and scaling out on an individual trade. That doesn't happen too often. So for me, I've tested different ways of managing my stop. So the old adage is get your stop to break even because then the trade can't lose. Well, that's one side of the coin. The other side of the coin is if you have 7 break-even trades on the trot that all would have been 2-to-1 winners, then you have outright losers, you're actually in a worse position. So I try not look at it from the point of view of having...
Just to clarify, guys, we're not looking for 2-to-1s here.
You know, making my trade a winner. My trade will be a winner if it hits my target, or I'm able to manage my stop and it comes back and hits my stop. So the way I'll...
Okay, guys, so the conclusion is pretty much the same thing. Mindset is everything. Mindset is key. So accept the fact that if you're just starting out, that you are just starting out and that you want to improve from there. But give yourself time to improve, all right? And give yourself time to learn. It's very, very important. And it will be so super rewarding in the end. I've been working very, very hard in order to become a better trader myself. So therefore, I'm explaining you guys exactly what I'm doing now to hopefully learn you know, or like make sure that you avoid the mistakes that I made. However, making mistakes is a good thing, right? But if you can learn from my mistakes, it will be even better. So let's go back into the charts right now. Bro, can you check USD card and let me know what you think about going long at 129? All right. To be honest, I think that there was an area of imbalance underneath. So I don't think it's really beneficial. AU already. We broke structure here right now. We created a higher high right here. We see actually change of character right here. We actually finally created a higher high. This is a very, very good sign. We have liquidity build up above here. Of course, we have a beautiful area of supply right here, which will be our take profit. Potentially, I would wait for a clear break and then a retracement towards this range to then go long and then to look for potential long position right there. Another thing, potentially, well, this is in the long term or in the midterm, is that when we just come back up right now, touch the supply zone, get a rejection from the zone. We look for areas of liquidity right here that are getting built up. Could easily be right there, right? To then come back up, to then come back down. Take out this equal lows here. So it totally depends on the way the liquidity is. Right now I would say we look for potential long whenever we see a retracement. Okay, I'll be right back. Bye. Guys, give me 2 minutes. All right. Let's see. What did we miss? So far, I'm looking at the US 100, right? The Nasdaq first. I think this is something very, very interesting because we're entering this area right now. So we need to pay close attention towards this. I think personally that the New York Open could manipulate the London session and therefore we could look for a position right there. Let's see if it will happen anytime soon. Just need one more volume spike right here. Most of the time it will happen when the New York Open, especially for the Nasdaq. If you're looking at the past right here, if you're looking for this area of imbalance right here, we can actually see that every time the New York opened, the volume kicked in drastically. You see that? So, if we have this right now, right? We know that we are entering the area of supply to fill up this imbalance right here. We know that potentially when New York opens, we're seeing that massive spike, right? Like here, like here, like here. To then retrace from there. Makes sense, because we would also fill up this imbalance here, plus the liquidity down here. So we could look for a potential short right there. This can happen anytime soon. Maybe in the stream. If not, then definitely potentially tonight. And then I will share this immediately in my Discord channel. Jay Marcus, my man, how are you? Hope you're doing well, man. I wish you a very, very good week. Some great setups there this week, so I'm looking forward to it. Looking forward to trade. How is it, Lorenzo? Are we selling Nasdaq during the New York session? Because it's reaching the imbalance. Yeah, exactly. So, yes, we have a tiny bit of manipulation right here, right? We have a tiny area of supply here. Potentially, some people are actually going short here, not knowing that there is actually some liquidity right here and overall imbalance right there as well, right? So let's take that in consideration as well. We clearly have an area of imbalance right here. And we have clearly some liquidity built up right above this as well. We have never touched this supply zone yet, right? So the combination of some imbalance of liquidity buildup is a very, very strong tool. We are also massively overbought on the Nasdaq on the 1 hourly, on the RSI right here. Massively overbought. We're relatively overbought on the 4 hourly as well. However, we still have a way to go. So potentially, yeah, this could be a very, very good entry, guys. So our entry would definitely be at 12,260. Stop loss at 12,350. Take profit. Take profit I would potentially put right here. Back on this demand zone. The reason why is because we left some liquidity right here. And of course we had already multiple touches on this demand zone right here, right? So taking that in consideration, we have not created a higher high yet. Let's say we create a higher high. Maybe you could take profit, potentially put you take profit first already right here as a TP, because we're seeing a demand zone getting created right there, or getting created, which is still 7 to 1. However, let's say you take here percentage profit and here you take the last piece. That's what I personally would do, because there's still liquidity underneath. So yeah, the Nasdaq is one of the first trades we're going to take, most likely, right now. Same for the US 500. They are very, very similar, right? However, we know that the Nasdaq is front running the S&P And we're seeing a massive decline of the DXY right now. This is very, very interesting. Look at the run we made in the last couple of weeks. It's very, very insane. This is actually a... this is a 5-year consolidation range, or a 7-year consolidation range that we broke out. We came in this era of consolidation right here. Look at this. 7 years straight in this consolidation range. Right now we're breaking out. So yeah, potentially we're going to go back down right now. That's why the euro towards the dollar is also increasing right now, because the DXY is actually going down while the euro is going up. Therefore, we could potentially see a retest of this level right here. It would make sense if the dollar index right now comes back down, to at least come back to this range right here, to then potentially look for higher targets there. That totally depends on so many factors though. So many news factors are related to the DXY. It's very hard to just use technical analysis for that. However, the charts don't lie. The charts don't lie, right? To be honest, guys, I really want to see a short opportunity right here. Potentially, guys, if you are interested in a short opportunity for the Canadian dollar against the Swiss franc, then potentially, right, we can look for a smaller trade. And that means that we can just hit the supply zone right here to then break structure and come back down to then go long, right? This is also definitely a possibility. However, please be aware that we look on the lower time frame for a confirmation. And the reason why is because I'm following our rules. We are under the equilibrium right here. So I do not tend to go in aggressively. What's up, Kimbo, my man? Good to meet you, man. Hope you're doing very well. I wish you a great week. This week is going to be very interesting. I'm also quite new on YouTube right now. Was streaming on other platforms. So yeah, we're started for the bottom, guys, and we're doing it together. So welcome. Indeed, it's definitely, I completely agree. It's like first time in the stream. Good to finally find a stream who trades similar to how I like to trade. Nice to have it in the background. Trading can be isolated at times. Tell me about it, bro. Tell me about it. That's why I highly recommend to always look for potential communities, either on Discord or on YouTube or whatever. Wherever you can find like-minded individuals, the better it is. The quicker we learn as well. So this should give you the highlight, Kimbo. We have our Discord channel here. It's completely free. I share all my charts in there. All my potential setups in there. You can also share me your charts right there. We can go over it. There are some killer traders in here now. And what we do is pretty much look at all the charts. We analyze all the charts. And I post all the updates in there. If I'm not live when I'm doing a trade, I will let exactly, you guys know what's happening whenever I am not live, so I will post it in here. Like expected. This is exactly the reason why I closed my position for GJ. It's purely because of the liquidity that builds up there. Massive amount of liquidity built up. Right there, we already saw multiple touches right here. People got induced to go short again. Most likely they'll get stopped out if they didn't close their positions right now. Yeah, we see equal highs right here, right? Causing a lot of liquidity right there above it. Stop losses right there. Potentially coming back into a range of consolidation. No imbalance, however, still areas of supply right here. So we have this one right here. So this is going to be a very interesting one. And the reason why is because we're going to get into the zone right now. We're going to see a first sign of resistance. Potentially we come back down. The question is, how far are we coming back down? Hopefully super far. So whenever we come back down far, we look for a retracement, then we enter the market and we go for a short. Right now we're pumping hard, guys. People will get stopped out at any given moment. Quick Bitcoin update, guys. Bitcoin is pumping hard, right? We went short here. I'll show exactly what I did. So, first of all, I had two positions open. Got stopped out on break even on one of them. Closed one position in profit. So first of all, we entered the market here. I said already, like, there was a lot of liquidity buildup right here. So the first time we hit it, we entered the market. We hit it the point of control as a target with a very, very tiny stop loss. Was around a 0.66% stop loss, which is extremely small for crypto terms. That's why supply and demand is extremely powerful. I targeted this zone. Obviously, we did not get there, right? However, what we saw a clear bounce. When I saw this candle, I knew, okay, something is happening right here. We see a demand zone right there. Let me at least look for a partial profit right there. Yes, I do take partial profits. This is completely a personal preference, right? I do take partial profits. Especially when I have multiple positions open for the same pair. So what happened was, we came back in, right? We didn't got filled. We came back in again. We got filled because our point of control got hit. Then we broke structure right here, just with the wick, right? On the 5 minute. The moment we came back up, causing a break of structure, came back into the zone, we went in for our re-entry. And this is what I highly recommend, is to look for potential re-entry setups as well. Then, beautiful break of structure again. This was the moment when I put my aggressive entry right here on break even. So right now, we're completely on break even. 100%, right? We still have our stop loss for our re-entry right here. Okay, so our aggressive entry is on break even right now. We came back down again. Right now we have double our position size, but we have the same risk. Because we are on break even right now. We went in again. We had a minor stop loss on this one. 0.23%. Beautiful entry, right? Our stop loss was even lower now. Our risk was even lower. So we came back down. We hit this demand zone. I was like, okay, now I see a change in the dynamic. We saw a change of character right here, right? Let me go on the lower time frame. We saw this break. This was the moment where I exited one of my positions, which was the re-entry position. My aggressive entry was on break even. So I made my profits and it went straight to the moon right there. So even if we get fooled, there are tons and tons of ways to still make profits and to protect your risk, protect your capital. trading is also capital. We need to protect our capital. We need to preserve our capital. It's all about preserving your capital as much as possible as well. So right now, what can we do for Bitcoin? Well, let's remove everything right now and go to the daily chart. Because this is very interesting. Okay? Because we're seeing something very similar right now. Right, we saw a massive drop causing a lot of imbalance right here in the market. A lot of inefficiency in the market. We came back up, right, creating a lower high. Then we created a higher low. Then we created a higher high. Then we created a higher low. Then we created a lower high to then drop, right? Okay. Again, what happened? Massive imbalance right here. Massive area of consolidation, massive imbalance, okay? We dropped hard. Again. We created a lower high. We created a higher low. We created a higher high. We created a higher low. The question now will be, what will happen? Well, it looks like, and we're not there yet, are we gonna create that higher low or not? This is the true question right now. If you do tend to create a higher low, then potentially something new is happening. Then I would say, okay, beautiful area of demand right here. Only when we create a higher high, right? Keep that in mind. Because what we're seeing is we're seeing a drop, we're seeing a base, and we're seeing a rally right here. Beautiful area of demand. So if you do tend to break this higher high right now, and we come back down, I would go long here. Look for a potential long entry here. If you're still uncertain because it's Bitcoin, we can all relate to that. We can look for the potential re-entry that I showed you beforehand, which is, obviously, coming back into this area, right? To come back up, creating a change of character right here. To then look for potential demand zone right there, right? If you want, you can even draw the FIB from low to high. FIB is in the, my bad. Hope you guys can see it now. FIB is in the description. Then we can look for potential retracement to then come back up to fill up all of this imbalance we potentially create when we come back down very, very fast. Okay? So if you are not sure and you do not want to enter aggressively, then wait for a confirmation entry, and like that, we will have our perfect entry with a minor stop loss, right? I mean, a 0.5% stop loss on Bitcoin is perfect. So let's see. Some of you guys only want to trade confirmation entries, which I can highly understand. Some of you guys like to trade aggressively. So let me explain you the key differences between going for an aggressive entry and a confirmation entry. Okay? First of all, it totally depends on your personal preference. Right? What kind of trader are you? My bad. So what kind of trader are you? Are you a trader that takes your time? Right? Are you a trader that takes your time and you do not want to spend too much time on the charts, watching the charts, analyzing the charts all the time? Then I would recommend you to go for aggressive entries, but only for the high confluence entries right there, right? So we're talking about the point of control. We're talking about imbalances in the market. We're talking about FIB levels above the equilibrium, preferably the 79 FIB, the 70 FIB, and so on, right? We're talking about liquidity, or areas of liquidity under the supply zone or above the demand zone, right there. This determines how high of a confluence a potential aggressive entry is. If you are a trader that is on the charts all the time and can, you know, work from your computer, be on your computer all the time, can look at the charts, and you can watch the charts live, then I would suggest you go for a confirmation entry. And the benefits of a confirmation entry is pretty much the risk to reward and a confirmation of trend, right? A confirmation of a change of the dynamic of trend. So therefore, it totally depends on what kind of trader you are. This is number one. So if you go back to Bitcoin, right? And let's take this old example right here. We saw a minor area of, let's go here, of consolidation right here. Right, we broke this consolidation area right now, right? At that particular moment. We broke it. What happened was change of character. Break of structure right here. Completely broke structure right here, right? What happens? We tend to fill up any imbalances in the market. Were there imbalances? Absolutely. Beautiful area right here. Beautiful area right here. At this particular moment. Sorry, it was this range right here. This range right here. So we came back down, we retested this zone, right? We came back down, we retested this zone, we came back lower. Liquidity was built here. Equal highs, got taken out. Then we came back up, we entered aggressively right here, right? We entered aggressively right here. So the key difference between an aggressive entry and a confirmation entry, because on the 5 minute we saw our confirmation entry, right? Is the risk to reward. So the risk to reward is way higher. Because your stop loss is of course way tighter, right? Your pips are way smaller. Sometimes on the flip side as well, right? Let me go to another chart right here. What we see also many times is, for example, okay? Let's say we go in aggressively right here, which I will. Right here. Targeting. This area right here. Some liquidity down here. So this is a 10-to-1 trade, right? We came back up, we filled up the imbalance right here, came into our premium area of supply, hitting our point of control, come back down perfectly, you're 10-to-1, right? then this is a in here long whenever we did not break a high, right? We did not broke structure here, so be very careful. Love your input on the market, Golden. Frank, bro, thank you so much. Wish you a great week. Let's make some good trades this week. For sure, man, I'll join your Discord. Just started my Ftmo challenge. Luckily, I didn't last week. So much USD news made the market very choppy. Yeah, absolutely, absolutely. I've seen the CPI reports. Very, very crazy. That's why I'm saying I do not trade any news right here. I try to avoid trading news because you can get stopped out very, very easily right now. And be very careful with trading news. The reason why is even if you have your stop loss, sometimes the reaction towards news is so explosive that you will get stopped out at market in a market order, but lose 4 or 5 times as much than you initially thought. Because price goes so fast that it has not the time to fully fill your order yet. So be very careful with trading news. But I agree. It was a very, very choppy market. There were some nice opportunities. However, I think that this week will be a very good week. I'm in a sale at 21.6. Should I close? No. I mean, it's always up to you, of course. But personally, as long as we did not break this high, I would not close my position. And expect, even when we break a high, potentially to reverse, to come back down, mitigate this area of demand, to then go up. But if you just don't want to take the risk, yeah, then close your position when we break the high. Until that moment, I would not close your position because we can easily come back down right now. If you look correctly, we're already getting rejected at this particular moment. However, everything can still happen. The candle just opened right here, right? So you went short right here, huh? Okay. I see why you went short there. If you went short at 21.6, then I would highly recommend you to put your stop loss at least there at 21.75. If you do not want to get wicked out, I would have put it at around about 21.9, which is still only a 1.5% loss for your trade, which could be fine. Just base your position size, you know, on your stop loss right there. So always put a stop loss, bro. For now, if you're getting this rejection right here, we do not have to worry. So yeah, it's very interesting what Bitcoin is doing right now. I think this has to do with the news that will come out in August, where we know that one of the exchanges are finally releasing a lot of their Bitcoin. However, my question to you, what do you think will happen with this Bitcoin? Do you think that these Bitcoin will be actually sold or will be held? I personally believe that they're gonna dump these Bitcoin on the market. Devin, you're in a sale too at 22,270, right? Okay. Be very careful because I don't see a clear area right there. Potentially this one, maybe. If you do not attempt to break this high, I potentially see lower targets. Definitely. We have to break the 21.6k, 22.6k. Okay, we're seeing a beautiful bearish engulfing candle right now on the Canadian dollar against the Swiss franc. We know that there's a massive area of liquidity right here. So potentially we come back down to crush it and then, you know, take out the liquidity there. So if that tends to happen, then option 1 is still in play. And then I'll potentially look for a potential long entry right there. The Nasdaq is coming into play, guys. Keep that in mind. We're probably going to enter a trade very, very soon. Keep in mind, we're extremely overbought on the 1 hourly right now. Extremely overbought. And we're still not there yet. We have not seen these highs before. In a very, very long time. The last time was the 30th of May. Well, we know what happened then. After that, we saw a massive drop right here. There we go. What do you think about gold? Well, personally, I believe that that there is not really a great opportunity for gold right now. However, we're seeing a break of structure right here. So potentially we could wait for a retracement if you want to take a position long. However, keep in mind that this will be a lot of resistance right here, right? A lot of resistance already, because this was a complete area of consolidation here. This whole area was a extreme long area of consolidation, followed by a massive drop, right? Actually, no, a massive drop, massive fake out, another drop. So a lot of manipulation there for gold. Now we're coming back down to fill up this imbalance right here to potentially look for lower prices. However, if you zoom out, massive imbalance here, massive imbalance here. If we draw the last high from the consolidation range, right, from the FIP towards this low, then it's under the equilibrium. So for a sell, I would be very, very careful right now. For a buy, you're at 17, 14. Okay, yeah. If you have placed in a buy stop, I can understand why. I personally like to wait right now. Wait for a retracement. To then look for this opportunity right here. It's a 4-to-1. It's not that big. 3.3 to 1 actually. Let's say 4-to-1. I would not close your position completely. I would definitely sell partially. Keep my position open. So yeah, I would definitely wait for a retracement right here to come back to 17.10. Okay, let's see if you see any opportunities right now, guys. We know that the Nasdaq is coming very, very soon. We have to be careful though, because the New York session can come into play to manipulate the London high. So you do not want to get stopped out just because of the New York Open, right? We want to wait for at least the New York Open to at least, you know, get rid of the volatility. The reason why is, again, look at the scenarios right here, right? Every time the New York session opened, massive, massive volatility at the beginning. Look at this. Massive volatility, massive volatility, massive volatility, massive volatility. Every time when the New York Stock Exchange opened right there, massive volatility. That's very good right now. If he's taking at this particular price, if we're hanging around this area right here, knowing that there's liquidity just above it, then massive volatility is amazing, because this will give us, you know, a massive, massive opportunity right there to go short. Stop loss right there. To then look for lower targets right there. However, if we are already entering the supply zone before the New York Open, right, that means that the New York session can manipulate the London session and potentially we just shoot up. So therefore we really want to wait 20 minutes, 30 minutes before you know, the New York Open has been taking place. Or has taken place. Gold has just taken a lot of trendline liquidity from October last year, plus has a massive double top on the weekly, so I'm waiting for long opportunities. Yeah, absolutely, bro. Yeah, I agree. I agree. I mean, we've been dropping significantly hard, right? Overall, look at this. In general, we're looking extremely weak right now. However, we want to make sure that we're seeing a clear higher high getting created, potentially coming even back to a a supply zone right here to then look for potential long when we retrace again. If you want to have the ultimate confirmation. Until that moment, we can still just, you know, do whatever. We can still just come back up, come back down, come back up, you know, come back down. There's so many things we can do. However, if you want to take the risk, we can. There are still definitely some trade opportunities right there. We have some imbalance right here, right now. We saw a change of character right here. We're creating a break of structure right here. First higher high. Then we're seeing already right now that it's, you know, coming back down to potentially then come back up. So yeah. Let's see what gold does. To be honest, guys, I can do this again. Like, these are my favorite charts. These are my favorite charts. I would go in aggressively without even thinking about it. And the reason why is, first of all, we're pretty high. We're pretty high in there, right? We saw a massive drop. Massive, massive imbalance here. So what we see? A beautiful area of consolidation, right? Beautiful area of consolidation. Followed by a massive, massive drop. We call this expansion, right? We started to accumulate, creating liquidity right here. Got taken out right now. Slowly coming back up right now. It left us with a lot of imbalance here, right? And inefficiency in the market tends to get filled up. There's a huge gap here. You can use this indicator. It's called imbalanced zone by Frozen. If you still don't really know, if you're still not really sure about areas of imbalance, then use this indicator. And look at this huge gap right here. This huge gap tends to get filled up right now. Like, in general, algorithms, bots, institutions, market makers see imbalanced areas as magnets. It attracts. It tends to get filled up to then move price around. Therefore, we're seeing a beautiful area of consolidation here. We're seeing a beautiful area of supply above this area of imbalance, right? Beautiful. We use the fixed range volume profile. We start at the beginning of this range. We take it to the end of this range right here. And we're seeing this red line. This is what we call the point of control. So the point of control is aligning perfectly with this area of supply in combination with a huge area of imbalance underneath. What tends to happen right now when we draw the fib, the top of this consolidation towards the bottom right here, the 79 fib, this is our premium area of supply, is aligning with the area of consolidation, with the point of control, with the volume area low, with the supply and the imbalance zone. So pretty much we have all the confluences together. All the confluences are aligning with each other. To finish it off, if we would create some sort of liquidity here right now, then the best possible trade we can wish for. Boom. Short right there. Take profit right under this area of liquidity. This trendline liquidity right here. Potentially coming back down to fill up this imbalance right here. We're seeing a beautiful area of imbalance here. Beautiful area of demand. I would come up. I would come back down there. So this is where we would go. Therefore, everything is aligning right now. Everything is looking very, very, very good for the Canadian dollar against the Swiss franc. So let's see what price does. Again, if you tend to break this trend line liquidity right now, we fill up this imbalance right here. That's fine, because we see also a beautiful area of liquidity right here, right? Equal lows, just above the demand zone, just above the imbalance right here. So no matter what price is gonna do, we're gonna find a position here, either long or short. So yeah, I'm very excited for that. I hope you guys get the way we trade right here. So consolidation, expansion, retracement, confirmation, entry. And don't forget the liquidity and imbalance, of course. Okay, the US 100 it's going very fast right now. I'm not really excited about this. The reason why is because the New York Open is very, very soon. Let's say in like 3 hours from now we have the New York Open. If we are already at that supply zone before the New York Open, I would say be careful. Be careful with entering aggressively. Because we can easily just get, you know, spiked out just because of the volatility, right? We can get here and then come back down, for example. That's why we need to wait now, purely because of timing, for the New York session to be done. Also Bitcoin, nothing to worry about, bro, right now. A lot of resistance right here. It's still not a higher high. Still not a higher high. The euro is still looking not that great at the moment. Okay, I'm gonna do a poll. I'm very curious about this right now. So my question will be, is the euro gonna go under 95 cents of a dollar or above it? Or will it stay above it? Okay, the poll is up right now. I'm very curious what you guys think, because the euro is looking extremely weak to me. However, we're seeing a short bounce right now. So what do you guys will happen with the euro? If you think that this was the bottom for the euro, then you say above. If you think we're going to see lower targets from there, potentially 95 cents or lower, then I put it wrong, by the way. I meant obviously 95 euro cents to $1, right? Just to clarify that. I will give my honest opinion later. So right now we're seeing a higher high though. We're seeing a higher high getting created. But I think this will cause a lot of resistance right here. For the euro right now. However, it's good that we see at least some sort of a bounce because it was looking very, very bad. We're actually bouncing from this range right now. John Wick, hi Lorenzo, hey man, nice to meet you, bro. I hope you have a great week. It's gonna be a very, very exciting week for us. A lot of trades will come. I think the first trade will come tonight. I think the Nasdaq is very appealing. Maybe even GU long when we see retracement as well. So 60% of you guys think that €1 or like $1 will become, sorry, €1, $1 will become 95 euro cents. Dollar cents, sorry. So confusing, right? My honest opinion, I think the same thing. I think personally that the euro will come down more. It is very, very hard right now. We have a lot of scenarios right now going on in Europe, of course, why this is all happening, right? The dollar is getting extremely strong. We all know why. Then, of course, the oil has to be paid in dollars, right? So if the dollar is getting stronger, it gets more expensive for European countries to pay for the oil. We have, you know, other things I don't want to talk about. We have a lot of things going on as well in the world right now. So the euro is not doing very well, right? We know that there are a lot of countries in Europe having a lot of debts. Therefore, the euro is not going well. In my last stream, I talked about it. I remember when €1 was $1.60. It is a very, very big difference with what it is today. However, let's see what happens over time. How did you create your strategy? So, well, in essence, the smart money concepts is the base foundation of my strategy. It's a combination of supply and demand, imbalances in the market, liquidity, and so on and so on. So that's pretty basic. Still requires a lot of work, right, to build out. However, I use some external factors to work with to like improve my strategy over time. And I noticed that whenever I use these kind of tools, it really benefited me very well. And it actually improved my strategy by a lot. And that was just by testing a lot of things yourself and trying to, in general, test your strategy out at a certain point, test it out again, and so on, constantly improve, right? So I'm constantly tweaking. Even now, I'm constantly trying to develop my strategy. And one thing is obviously the fixed range volume profile right here. This is extremely powerful tool. And the reason why, especially in areas of consolidation, it shows you exactly where in that consolidation area the most volume has been traded, right? So for example, take in consideration that institutions, they cannot just enter a single position. Sometimes they have so much capital, they need to place multiple orders in order to, divide their order and to create an average order, right? So let's say an institution bought here, sold short here, sold short here, went short here. Then their average, shorting price could be, and I'm saying could be obviously, right? But like it could be then at the point of control. This is the area where the most volume has been traded and where everything comes together, right? So you can expect sometimes that there is a lot of resistance there at that area, because there is a lot of volume in that specific range, in that specific level of that consolidation range. And the way institutions work, they work with average order prices, etc., because they have too much liquidity, and therefore they need to, place multiple orders. We as retail investors can just go in straight away, pay a little bit of spread, a little bit of fee, and that's it. They really have to go for the average orders. They have to go into multiple levels to then pick out their average buying or selling order, to then make sure that it's in the right direction, and then, so it gets already way more complex. So this tool helps identifying volume, and it really works very well with supply and demand. So I highly recommend you guys to use the fixed range volume profile as well, or volume profiles in general, if you want to know specific areas right here. Sometimes it is extremely exact, especially when we're seeing a point of control aligning with, an area of supply, for example, like here. We can use this as an extra confluence in the market. Same for, the Fibonacci, of course, as well. However, the Fibonacci is quite common. However, not all the people that are trading supply and demand are using the Fibonacci. I highly recommend you to use the Fibonacci because you want to know exactly where you are in the charts, right? You want to know exactly what the right area is of your supply zone. If your supply zone, let's say your supply zone is under the 50%, right? And you want to go short right here. So people went short here, right? Let's say people went short in this area right here. Right here. Right? It definitely worked, right? We're seeing a lot of resistance here, etc. We definitely came down and we could go down even further. I'm not saying it's wrong. However, in this case, it is under the equilibrium. Right, it's under the 50% of the Fibonacci. Therefore, you're not selling for a, in essence, a discount. You're not entering for a discount to sell for a premium. Because you're already entering for a premium, right? What you want to do is, you want to use the Fibonacci level as an indicator of where your supply and demand zones are located. So in this case, this zone right here is located above the 79%, far above the equilibrium. That's a very appealing way, a very attractive area to go in short. Because you want to enter for a discount and sell for a premium. And that's why the Fibonacci is very good. So we have the Fibonacci in combination with imbalances, point of control. These are all external factors that we can use with supply and demand. So just supply and demand is, in my opinion, a great start, a great beginning. But in combination with all of these factors, with the indices as well, the currency indices as well, right? We can look at these. we can bring so many confluences together that our risk management is really, really on point, and we know exactly when to look for confirmation entries and when to actually look for aggressive entries. And that's a big, big difference. That's a big, big difference right there. So the more confluences, the better it is. I appreciate that you look at the indices. Yeah, exactly. So I respect them. Yeah, absolutely. The indices are super powerful. Again, as an extra confirmation, right? Just an extra confluence. You see the dollar index right now. We knew that the dollar was extremely strong because of the dollar index, the DXY, right? We know that the euro is extremely weak because of the euro currency index, etc. We have the Australian currency index, we have the British pound currency index, we have the Swiss franc, Canadian dollar. Australian dollar is picking up against the Canadian dollar right now. The Australian dollar against the Swiss franc, I'm looking at a confirmation entry right here. The reason why is because there's a lot of imbalance above it. That's why I want to make sure. However, I like the fact that we saw a beautiful area of consolidation here. Massive drop. Now coming back up to fill up the gap. And also it left us with some liquidity right here. Under this supply zone. A lot of people that went in here got induced to go long. It reversed price relatively fast. It never came back up really to that area. So these people that went long here got trapped, right? That means that whenever price will get there, either the stop losses are getting hit or they are gonna go out on break even, which will cause a lot of resistance straight away. Therefore, we can assume that price comes in here, taps into this area of supply, then potentially we go on the lower time frame to look for a break of structure or a change of character right here to then enter the market for confirmation to then come back down. The reason why we look for confirmation entry is because of these areas right here. And of course, we are under the equilibrium, so be very careful. There are always exceptions, right? However, confirmation entries are relatively good, relatively safe. Keep a very tight stop loss. Don't risk too much right here. The higher you go into the chart, the higher you go into the FIB levels, etc., the more risk you can potentially take. At least this is how I do it right now. So yeah, I'm very, very excited right now. But still, the main pair we're looking at right now is the Nasdaq. We really want to wait for the New York Open to take place because right now we can easily get manipulated. Bitcoin one more time, okay, sure. So the same thing as before. You entered at 21.6, right? So I see multiple areas of demand right here. 2 areas of demand right here. If we do not tend to break this area, to break this high right now, I assume that we come back down at least to fill up the imbalance right here. If you are trapped at 21.6, then this is your way out. If we do tend to break this area, come back aggressively or come out aggressively and we do not see any retracement, I would close your position. What we hope to see, of course, is actually that we are breaking this high to then come back down to retrace and to then look for potential long. Because that's on the higher time frame, the confirmation for us that we actually broke a higher high rather than what we saw here, right? We created a higher high, created a lower high, massive drop. This will be the other way around. So we created a higher high, higher low, then a higher high, higher low, then a huge area, then a huge pump, for example. I mean, history doesn't repeat itself, right? But it definitely rhymes, so we can take this in consideration. It looks extremely similar to the range before. Therefore, we really want to see something different. We want to see that this area will get broken right now. As expected, right now we're seeing some early shorters coming into the market from this supply zone right here. What they see is probably the same thing as what most people see right now. They're seeing a break of structure right here, right? Come back up, retrace, and to come back down again. It could definitely work out. However, the reason why I don't personally will not enter my position is because of the liquidity that's right there. Massive amount of liquidity right above this zone, massive stop losses, a lot of imbalance here. Very tiny area of supply. No, it's not really looking that appealing, but I understand why a lot of people would enter short there. I think these early shorters will get stopped out, personally. Something like this. Let's see. Same for the G with J. I'm happy I went out of this position. Break even because yeah, the liquidity was built up there. And right now we're grabbing the liquidity right there. You see that? We're going for it. Do you post your trades anywhere when you enter a position? Yeah, absolutely. So when I'm live, of course I will do it live and I will tell you exactly when I go long or short right now. However, it's not always when I see something live that, you know, we can enter straight away. So therefore, I created a free Discord channel for you guys where I share all my charts in here. All my charts and exactly, you know, all the updates right here. For example, Bitcoin got perfectly filled. And you see exactly what I did with Bitcoin. I went into the re-entry right here. Then we saw another re-entry, etc. You see exactly when I close my profits, when I go long, etc. The other thing that I really like is the fact that you guys can also share your charts in there. And I can talk with you about your charts, can give you direct feedback. We have some other traders in there that are really, really good. And, you know, these guys can just help you out. We're a community, so we want to help you guys out as much as possible. Completely free. I will not ask you guys for any money whatsoever. It's just for you guys. So when I'm not live, it's very handy. You see exactly what I'm doing or when my orders got filled. Also, I will every Sunday make a video where I discuss my weekly setups, right? Whenever I do not have the time to go long or actually to create a long stream, etc. I just create a short 10-minute video where I explain all my setups then for next week, right? And I post it as an unlisted video on my Discord channel as well. So if you want to see that, then yeah, you see exactly all my setups for this upcoming week. So every Sunday you will have a complete update for the next upcoming week, for at least the charts that I'm personally looking at. You can see an example of the yesterday's stream where you could see that. So I hope that will help you out. So yeah, GJ is going for the liquidity hunt right now. And guys, I just started on YouTube. We started at the bottom, right? I just did a few streams right now. It's picking up very well, so I really, really appreciate that. However, if you would like to help me out by thumbs up, you know, it will definitely boost the algorithm and yeah, hopefully we can grow together like that. I was always streaming on other platforms. But yeah, I like YouTube a lot. Very easy, very convenient, very easy to reach you guys. So yeah, let's crush it. What's very interesting is for the... I'm looking at the Australian dollar and New Zealand dollar as well. And this is very, very interesting. We're seeing a huge area of consolidation right here. Massive liquidity built on both sides. However, what we see right now is a beautiful area of imbalance. What happened afterwards is that we broke out. Could potentially go for all the liquidity right here. Right? This is just an example. We go for all the liquidity. All the stop losses are here. Because everyone that went short here. Right? Where are they putting their stop losses? Obviously right there, right? Everyone that went long here. Stop losses right there. So either two scenarios will play out. We tap into this area of supply right here. On the 4 hourly. Beautiful area of supply. Fill up this imbalance. Take out all the liquidity from here. To then reverse price to look for low targets, to take out all the liquidity down there, right? Filling up all of this imbalance right here. Because if you look on the daily chart, we're extremely overbought. And we're seeing an area of imbalance right here. We're seeing some equal lows also right there. So there are tons of reasons for the Australian and New Zealand dollar right now to go down. Therefore, I think personally that it makes more sense. We actually would go up first to fill up the imbalance, to fill up the gap, mitigate this area of supply, pretty much on the top, form a, beautiful bearish pattern with our come next to, but like right now, to then come back down, to fill up this imbalance right here, to then look for potential exit. So this could be a beautiful trade as well. Right now we need to see a breakout of this consolidation range first. We still have a long way to go. However, liquidity is highly built on both sides. This is what market makers like, right? They like to tend to build out liquidity on both sides to then eventually take it all. Because a lot of people, they don't take their profits. So yeah, after a while also, of course, like retail traders get very confident. They see a beautiful range. They enter here, they then think, okay, perfect, we're gonna go back down again. And then, they get stopped out. But in the end, what happens is that they're building liquidity because they need liquidity to move price around, right? Just assume that institutions, market makers, big players in the game have 99.999% more liquidity, or we are like the 0.00001% of all the money in this system. Let's assume that. But we are the easiest part of liquidity. We are the easiest liquidity out there because we fall for all the traps the easiest. So they need us. They need to build liquidity because they know that the retail investors or the retail traders will get trapped no matter what. So they can use that liquidity to then move price into the direction they want to build out their positions. Because you need liquidity for bigger players. They need liquidity to build out their positions and so on and so on. And whenever you get stopped out, let's say you long a position and you get stopped out, your stop loss get hit, you are forced to sell. So you provide liquidity in the market. Therefore, stop loss hunts happened all the time. And therefore they're building liquidity. And the way they build liquidity is by looking at areas of consolidation, trendline liquidity, equal highs, equal lows, you name it. That in combination with an area of imbalance is extremely powerful. So what we can expect is that price comes back up right now to then take out the liquidity from this area already. All the stop losses here are done. Fill up the imbalance to then come back down and to reverse price. And what do you see on the higher time frame? If you see it right, beautiful head and shoulders pattern on the higher time frame, which is massive sign of reversal right there. Beautiful. It's like art, guys. Trading is like art. You can play around with it as much as you want. So yeah, put this one on your list definitely. The Australian dollar against the New Zealand dollar right here. My guess, if price goes there, doesn't have to be, if price goes there, then this will be my trade. Let me put it in the Discord channel right now. There we go. Breakout, Grab the liquidity, fill up the imbalance to then move price back down. There we go, guys. And please, guys, really share your charts in this Discord channel as well. I really want to make sure that you guys are also improving and that we can do it together. So therefore, I really want to analyze your charts as well. For the Australian dollar against the US dollar, we're breaking out right now. We're waiting for a break of structure right here to then come back into to this demand zone, to this area of this demand, to mitigate this area, to then go and look for higher prices there. Potentially to come back to this area of demand right here. Tons of liquidity build up right here, right? Tons of liquidity build up right here. First area of resistance will be here. And the reason why I sometimes use horizontal levels is, but just look at support or resistance levels, right? Very basic. So here clearly we see support here, potentially we need to see resistance here. This is the reason why I will not go in on the lower time frame confirmation of a break of structure or change of character, because on this higher time frame or the 4-hour chart we're seeing massive resistance right here, right? Support, resistance. Therefore, we really want to see a break and candle closure above this area before we come back down again. John Lloyd says volume profile. Yeah, so the fixed range volume profiles I use, but I mainly use it personally for areas of consolidation like these, for example. So this is an area of consolidation right here, right? This is Nothing different yet. Okay, let's wait for the New York Open. I think the New York Open is gonna come soon, and then we will see. A lot of liquidity here, a lot of reasons to come back down, right? However, sometimes you do not see a clear retracement. So you cannot, personally with this strategy I'm using, I cannot go in short that, right? We want to have the perfect risk to reward ratio against a minimum amount of risk. If you have to take excessive risk, we will not do it. There are plenty of opportunities out there. Massive bearish divergence here. Again, we're seeing a lower low on the RSI while forming a higher low on the price, right? Which is showing us a, it's kind of pretty much a loss of selling power. So we're losing selling power, and this is the highest indication. So therefore, the RSI is one of the indicators I personally use for macro. For example, for the daily chart, the 4-hour chart, I will see and use the RSI to look if we form any bullish divergence or bearish divergence on the RSI. I'll give you one example why it is extremely powerful right here. So I hope you guys can see this. Oh wow, this is very bad quality. Let's see. One second. So look at this, guys. I'm putting my video out for a second. So whenever we see lower price action in price. So we're forming a lower low in price by creating a higher low on the RSI. We're forming a bullish divergence. This is a very, very good indicator to show you exactly where you at on a macro level in considering the price, right? This could potentially indicate a reversal. Of course, there are a lot of other factors in play. However, the combination with this on a higher time frame is very, very powerful. So whenever we create double top scenarios on price while we're forming a double top scenario on the indicator on the RSI, we're creating actually a bearish divergence. That means that there's a lot of, selling power potentially coming into play. No? The bulls are losing their momentum. Here the bears are losing their momentum. Then we have a hidden bullish divergence, is when we create a higher low on the price while we're creating a lower low on the RSI, both double bottom. And same counts here for a double top scenario. So this is an extremely powerful tool. I highly recommend you guys to use it as well. I use this also with supply and demand, just to give me an extra confirmation of where we at the chart. If potentially we're going to see reversal happening very, very soon, right? So, beautiful area of consolidation right here. Beautiful area of consolidation. Massive expansion. Now coming for retracement right here. Again, combination with some build-up liquidity right here to move price up. Heading into the 79% to then move price down, potentially. Right? Again, on the higher time frame, what do you see here? Head and shoulders pattern. Dude, please check the Discord channel and let me know what your thoughts. Sure. So, thank you for sharing, bro. Let's have a look at your chart. All right. So first of all, let me look at the British pound and Japanese yen and then see if you're aligning with what you with your setups, okay? So we have the British pound against the Japanese yen. So what we're seeing right now is what we expected to have, right? We're seeing a liquidation hunt right now, a stop loss hunt right now, coming into play. The reason why, you know, I'm going completely clean right now. So what we're seeing first, the first thing I'm noticing, whenever I do charting, whenever I analyze the charts, the first thing I take notice is, of course, the liquidity. Before we do supply and demand, we're going to look at liquidity. So again, two areas of liquidity right here. Where are they putting their stop losses? Of course, above it, right? That's why right now we're at the stage where they want to take the liquidity to then potentially reverse price back down. And the reason why I say that is because we're seeing potentially clear areas of liquidity also down. So if we go to the 1 hourly, what do we see here? Liquidity, equal lows. We need to look for a reason why the market makers or the big institutions want to take price down. The only reason will be if they have, you know, enough liquidity to move price back down, or if there is enough liquidity at that specific area where they want to take price. So in this case right here, we're seeing some liquidity as well. Same thing right here on the lower time frames as well. We can take it back to the lower time frames. There is no difference between higher and lower time frames right now. There could be a huge concentration of stop losses still under this area right here, just because we saw a major spike, right? So this is also the reason why I would never go long, for example, right here. That is because I see that there is liquidity just underneath it. Then it makes more sense to grab the liquidity right here, induce a little bit more people to go long. And what you see a lot of times is that at that specific moment you come back down, you see short retracement, you think you're in a profitable situation, and then boom, price comes back down out of nowhere. So liquidity back down, enough reasons to come back down, right? For now. Let's see. Are there any more reasons to come back down? No more imbalances here. No more imbalances here. The imbalance here got already taken out right here. So there is not really a reason. I don't see that much of liquidity also getting built up. The only liquidity I see right now here are clearly here. Of course, there's liquidity everywhere. But I think this... there were a lot of early shorters in this position right here. Same for this position right there, right? So what I expect is that price will actually tap into this area of supply, potentially reach our point of control, to then potentially come back down to look for any reversals. And the reason why is because, look on the 1 hourly, massively overbought territory right here. Massively overbought, and we're not there yet, right? They're still in the process of taking liquidity first. So I'll use this tool, this consolidation range, as the main indication. So I will personally look at either the 166 or the 166.6 as the two areas of supply. For now, I prefer the 166. Just this area right here. The 166 should be the best one. So this one right here. So let's have a look at your chart. And I see the 166 right there. Perfectly. Stop loss at 166.5. I will put the stop loss at yeah, 166.4. So I think your second supply zone is a very, very interesting one. And I understand why you took this one. The main reason why I choose this one is the point of control of this area. Look at the volume. Look at the volume spike that was traded there. That means that if we're already massively overbought right here on the RSI, we're massively overbought. We still have to go up more. And then we reach the highest area of volume. It's going to be very, very hard to just break through at once, right? So what you could do is you could wait potentially for a confirmation entry right there. On the lower time frame. Look for a lower low, you know how it works, to then come back down. Perfectly. I mean, it's amazing the fact that there's liquidity here just under this massive area of resistance where there's a lot of volume traded and where, you know, there is a gap between the liquidity and the supply zone. So good job, bro. Amazing, amazing. You can always send me these charts right here. Very, very amazing, bro. And where would the possibility to take profit? So personally, I would look at liquidity. Once again, right? So use liquidity as an area of take profit. Either a beautiful area of demand, an area of liquidity, or an area of imbalance, or the combination of everything. So in this case, I would look at potentially, you know, to be honest, a possible rebound towards this area of demand right here. That's this area right here. And the reason why is because we see a beautiful area of liquidity right here. A nice demand zone right there. If you do tend to break this, we're creating a higher high too, right? So this is a beautiful area to go to take profit, in my opinion. The reason why I would not go here, because you see a beautiful area of demand here as well. Again, yes, we created a higher high, right? However, liquidity underneath. So always filter out the liquidity first, and then you know exactly if your supply and demand zone makes sense. So yeah, I hope that answers your question, bro. Thank you for sharing. Very, very excited to go over more of these setups. What about gold, sir? I will come back in a second for gold, bro. Nice to meet you, by the way. Florin. Congrats, bro, for your analyze. I'm your new sub. Thank you, man. Thank you for joining. I hope you're having a very good week. Let's make some epic trades together. And let's crush it, man. Thank you. Where are you from? So I'm Dutch. I grew up in a city that's called Rotterdam. It's in Europe, in the Netherlands. And I live in Indonesia right now. So I'm right now living in Bali, Indonesia, for the last 3 years already. And yeah, it's very weird because when New York opens, it's already evening here. It's already 8 p.m. So yeah, it's a bit weird when New York opens that it's already late. But yeah, on the other hand, it's very, very nice to get the Asian session 2, to have the London session, you know, around 3 p.m. for me, and then the New York session at 8 p.m. So it gives me a quite broad perspective right there. I'll be right back in 2 minutes, guys. Oh, there we go. What's up? What's up? Thank you for the subs, guys. I'm very, very excited. Thank you so much. Willy, hi from Indonesia. Salam malam, bro. Almost. Shayna, morning. How long have you been trading? Well, first of all, thank you for joining. So I've been trading for the last 5 years right now. However, I started trading crypto first in 2017. Of course, lost all my money. Then went actually very, very obsessive with trading because I was already playing poker. I was already in the probability game for a while. So poker is very, very similar to trading because you could, if you have an edge over the other player, if you have the right strategy, right? Same for trading. You could win, let's say 51% or 60% of your hands. So then over time you could consistently make profits. So I pretty much jumped from playing poker towards some e-commerce and then towards trading crypto. And then from crypto, of course, I became obsessed with trading. I really liked it. In the last 2 years, I became very, very serious. But I mean like obsessively serious. So like dreaming about candles. Is that weird? Is that weird? I don't know. But yeah, no, I created a massive passion for this, for trading in general. And the power of technical analysis is incredible. Are you a full-time trader? So yes, I'm a complete full-time trader. This is my main source of income. However, what I cannot repeat enough is that cash flow is king, right? So the only way we're doing trading is to generate cash flow. This is what we want. With that cash flow, so with these profits, we can look for potential investments. And with these investments, we can actually, go for the long term. So that's why everything, a bigger portion of what I make in trading, I put into other sources, such as, automated businesses or cryptocurrencies or whatever for the long term. So I can just wait 5 years, etc. As long as I make consistent profits with trading, everything is fine. And I really prefer small, consistent profits. This is what I learned over time. More than like a massive risk, massive profits at once, right? Because if you would compound everything, you would end up extremely high. So for example, let's say you make a few big trades and you do like 120% in a year, which is very good in trading terms, right? 120% per year. Or you make consistently 10% per month and you compound that, so you reinvest your portfolio right there. Then you will not have 120% per year, but you will have 330% per year. So the compounding effect is extremely big. So I highly recommend to go for lower profits, consistently. Are you trading with funded capital or your own money? Well, this is quite funny because I just trade with my own money. However, everyone was talking about, funded trading programs, proprietary trading firms and stuff. So I was like, you know what? I'm going to prove that I can do it too. Not for the money, but just for, the actual challenge. So I can actually show you. I will show you. tools I use. So it's not just supply and demand strategy anymore, but the basic fundamentals of my strategy is still supply and demand. Is in my opinion the most powerful and the most effective. And the reason why is because we look at liquidity a lot. And we start seeing the charts differently. We look at the charts in a completely different way, right? We look at the charts in a way of, okay, retail traders are entering long here, right? They're going long here, they're going long here, they're going long here, they're going long here, right? Every time it touches this trend line, they enter a position long. Where are they putting their stop losses? Well, obviously right underneath, right? So if there are enough stop losses underneath, guaranteed that the market makers, the big institutions see that, they have all the data, boom, move price back down, right? Making sure everyone is stopped out so they can use that liquidity to build out their positions to then profit from that in the long term. So supply and demand is my main strategy. However, you will see whenever I'm explaining this, you guys this strategy or the things that I'm exactly using, I'm using a lot more tools than just supply and demand. So I hope I can explain everything over time so you can do the same thing. Can you explain your strategy one more time? How many pips are you aiming at once? So, bro, that totally depends on the risk to reward. So, if my reward is bigger than my risk and it's a 3-to-1, I do not really look at my pips, right? I just know whenever I put $100 in my trade, I expect $300 back, right? If I put $1,000 in my trade, I expect $3,000 back because my risk to reward is a 3-to-1. So then it doesn't really matter how many pips my stop loss is, for example, or my take profit area. But I trade minimum, and that's a minimum at 3-to-1. A 3-to-1 is the minimum I trade. How do you know the level will break or bounce? Well, you can never really know, right? Like this is magic. Like if I would knew that, then I would just, or everyone would just make consistent profits. That's why we have a probability. You can never be sure. However, we try to put as many confluences together, which will I explain you many times, guys. We will go over it many times, right? The Fibonacci, imbalance, liquidity, point of control, volume area low, break of structure, change of character, and so on and so on. RSI. We put everything together. Based on that, we calculate, are we going to take a lot of risk by going in aggressively, or are we waiting for a confirmation entry, etc., etc., or do we skip the trade completely? For example, a lot of traders went short here. We didn't. Why? Well, clearly we are under the equilibrium of this Fibonacci level right here. I know it looks a bit messy right now. 1 second. So we have a area of consolidation, expansion, retracement, leaving us with a lot of imbalance. We tend to get filled up right here. People went still short here. You see that? Why? Because they see a supply zone. They see the supply zone. They think, okay, go short here, go exit here. Boom. But you need to look at the complete picture, right? You need to take all the confluences in consideration. Are we above or under the equilibrium? Is there imbalance? Yes. Is the point of control in the imbalance? Yes. Is the Fibonacci in a premium zone aligning with a beautiful supply zone? Yes. Do we see a rally-based drop here? Yes. Is that then more powerful than this drop-based drop here? Absolutely. We will get there, guys. We will get there. So most likely a lot of people got stopped out right now. That's why we did not take this position right here. Nathan, welcome. Good to see you again, bro. What strategy were you using and what lot sizes were you trading? So yeah, same thing. Supply and demand is my base foundation. I use a lot more other tools right now. I definitely improved that strategy. Give it my own, tweak a little bit. And lot sizes totally depend one more time based on the risk to reward. However, I never risk more than 1% of my trade with 100x leverage, around about 1% of my trade of my portfolio. So 1% aggressively or 0.5% when I wait for a confirmation entry. When I re-enter, also a 0.5% or 0.25%. And we use scalability trades, right? So not only one trade, we go in for multiple trades in a row when we see an opportunity. So once we are in aggressively and we wait for confirmation entry, we look for, again, a re-entry, again, a re-entry. So then at some point, you're not risking 1%, or you're still risking 1%, but your lot size is 5 times bigger. So this is where we work towards. I hope I can do this live with you guys. We will definitely see that over time. Are you going to make a video for understanding supply and demand? Absolutely, bro. I will do that. I will do that. I will maybe even do that this week. Ashleen, welcome. How often do you get on live? Yeah, so from Monday to Friday right now. I started like pretty much a week ago. I streamed on different platforms. I made some videos beforehand. Not really serious right now. I'm very committed to go live every single day. Sometimes the London Open, sometimes the New York Open. And then every Sunday I will have an extra video that explains my setups for the next upcoming week. So if you have watched that video from yesterday, you understand exactly the charts I'm looking at for this week. And whenever the charts are playing out, we will discuss them live. If I'm not live, I will post my trades in my Discord channel so you know exactly when I enter a position. Keep in mind, I will not give you guys the exact signals. I do not want to do that. However, I give you guys the trade idea so you can choose eventually how much you risk, where exactly you would enter, where you put your stop loss. Because most of the time, where I enter will be, for example, at the beginning of the supply, stop loss just above the supply, etc. Quite basic. So for my poll, we saw 36 votes. We had 56% under and we had 44% above. So 56% of you guys think that the euro will go under, the $1 mark. So, wow, if that would be the case, yeah, that would be very, very insane. It's definitely possible. I mean, things are not looking that good right now. Thank you for all the subs, guys, by the way. Highly appreciate it. And you see clearly right now, you see exactly that we broke through this area of supply, of course, as expected, to come up right now to fill up this imbalance here. This is going to be very, very important, guys. So most likely tonight, we will see a new position for EJ. We're highly overbought on the 4 hourly. We're extremely overbought also on the 1 hourly right here. We still have a long way to go. However, it could be tonight that we're going to fill up this imbalance right here to come back down right there, right? It's a beautiful, beautiful area of supply right here. We're seeing a beautiful rally-based drop. I will explain you guys when I make the supply and demand video. You will exactly see what a rally-based drop means. Or look at my video stream from, I think, Friday. Views on Aussie against USD. Yeah, so for the Aussie USD, of course, the first thing we look at is Liquidity, of course. We look at liquidity first, right? So, we come back up here. The reason why I want to see a break of this horizontal level is because it was massive support here. Look at the bounce we had from this area. Second bounce, relatively strong. A little bit weaker, but still relatively strong. It kicked off our new trend line right here, right? But again, once we broke this trend line, we came back up, immediately got rejected. So right now we want to see at least a break above it, right? For two scenarios. The goal is to get this liquidity right here and to fill up, any, gaps in this market right here to actually go to the supply zone. There's no imbalance here. Maybe on the 8 hourly. No, there's no imbalance here. However, on the daily there is above that, but it's not really that beneficial right now. So we're looking for a long, right? So let's say two scenarios. Let's say we break out above this zone and we come back down again. I would go long here. Stop loss right there. Entry right there. Target right there. Once we've broken this area again, stop loss break even. The other thing is, if we do tend to break higher right now, like reasonable higher, right? We come back down and we come back up here. Potentially look for a long position at this area right now. Totally depending what kind of candles are getting formed here. Probably we will consolidate here for a while before we actually move, right? So look at the candles here. Potentially we look for a potential demand zone that's getting created right here. And then we enter. So two scenarios. Come back up, come back down, come back up. Stop loss break even. Or, of course, come back up way higher. Come back down. Look for a candle. And then come back up. Perry van den Bergen. Nice to meet you. So many new people here. I'm very excited about that. So, do you trade Asian liquidity sweeps? I've been looking into the EU. I've been looking into that for EU these past weeks, and every day there is a huge RR potential, but I'm struggling with my entries not getting filled. Okay. And that's a very good question. So yes, I do look for Asian liquidity sweeps. I also look for London liquidity sweeps, right? And the reason why is because, of course, we tend to the London session tends to manipulate the Asian session, and the New York Open tends to manipulate the London session, right? So again, it all depends on supply and demand as well. So once we're seeing a beautiful area of supply here, right? Let me see if I can find a good example for you right now. Let's go to the 30-minute. Let's put on this Asian high. I would not enter here, but this is just an example. I would have not entered here in general. We don't see a low structure. I would definitely not enter. But as an example, I could explain you guys, right? So Perry, if you look at this, we're seeing the Asian session here, right? The London session tends to manipulate the Asian high or Asian low. Sometimes it manipulates the Asian high, then the Asian low, right? So whenever there is a supply zone just above an Asian session, for example, we know that sometimes you can expect the London session to take out the Asian session to then mitigate the supply zone and to come back down, for example. So then your supply zone would have been the entry with the target right now. This is just an example. I don't like this setup, but in general, this could be the case. Of course, the higher the zone, the supply zone, the more clear the supply zone is. For example, let's say we come back up right here, right? We come back up right here, and we're right here. And then we have the Asian session here, right? This is the Asian high. I make it yellow, right? This is the Asian high. London opens. What do you think will happen? Well, in this case, we could expect it to manipulate the Asian high, right? Let's say we come back down. We London open, we manipulate the Asian high, take out all the stop losses from this range to fill up any imbalances or this consolidation range to then manipulate the Asian low, right? Let's say the Asian low was, well, right here, to then manipulate the Asian low. So use supply and demand as a tool to, you know, look for the liquidity sweeps right there. This also counts for the New York session. Just trading on purely liquidity, yeah, I would personally not look into that, because indeed sometimes your order will not get filled, etc. Yeah, therefore using supply and demand for that as well. So only use it whenever you are close towards a nice premium area of supply. Yeah, that's a great extra confluence you can take consideration. This is also the reason why right now I'm very careful with the New York session right here. So we have an alert here, we're looking to go short. However, if, for example, we end up here when the New York opens, right? Then potentially we can just shoot up and just go through the supply zone, because there's so much volatility when the New York opens that we then come back down again and then everyone will get stopped out here. That's why it's very risky. So therefore I really wait for the New York open to be done for at least 20-30 minutes to then look for a potential short opportunity. However, it would have been even better if the price was around here. Let's say the price was around here. You know, New York comes, boom, volatility, boom. Massive dump right here to take out the liquidity here. The good part about the Nasdaq right now is that there is liquidity built right under this area of supply, which is a very high high confluence right there. So yeah, we need to definitely wait for confirmation right now, or at least make sure that the New York open is yeah, has been done. I'll let you know exactly whenever something is on my list. So I assume that price will get through the supply zone right here, come back into this area of imbalance to maybe go back down then as well. However, we need to be careful. Massive amount of imbalance here. Also massive area of consolidation. If price again tends to just go up, I would go in blindly, like boom, aggressively, not even think about it. I could place my order right now. Boom. Here, again, confirmation entry or a little bit lower risk, but still a beautiful setup right here. Rally, drop, base drop, massive imbalance, massive inefficiency in the market. We're already over bot territory right now. We still have a long way to go. Liquidity right here. What is your time frame for trading? So that's a very good question, and this is, I think personally, where the most traders are struggling with the most, including me before. How can I go from a daily chart towards the 1 minute and let everything align with each other? So this is where I create a video about, because I think this is the most important part, is by making sure that it's super clear for you guys how to narrow down, right? How to start analyzing at the daily to eventually get a re-entry or a confirmation entry at the 1 minute, right? And yeah, there are a lot of ways to do that. But most of the time I use the daily, 4 hourly, 1 hourly. Yeah, pretty much all the way down to the 1 minute. I do not have an exact time frame I'm using. You should use all of the time frames. If you see supply and demand and you understand the strategy, you should use all of them. But I will make a video about it where you could see exactly how I do it. Same counts for GJ. Keep a very close eye on it right now. However, again, New York Open very soon. Be very careful. What I would prefer to see actually right now with GJ is a small, a small dump right here to then come back up, to then come back down. This is the main reason. Again, we just came out, right? Liquidity was built right there. Liquidity has been taken out right now. All the stop losses have been taken out right now. Right here and right here. So most likely, it will be great to see confirmation right now. To come back down a little bit, to test this trend line maybe one more time. To come back into our area of supply. Tap into our point of control. To then reverse price back down. And yes, I would look for an aggressive entry right there as well. However, it's all about timing. So if the New York Open is exactly now when the price of this candle was right here already, yeah, then I'm not going to do it. Because then I need to see the New York Open first before we know exactly what to do. Because, again, let's look at the New York Open right here. Look at the volume as well. Okay, look at this New York. New York Open. New York Open. New York Open. Look at the volume. Massive volatility. Therefore, we are very careful right now. So everything needs to align, right? We have all the confluences in play. However, we still need to wait for the New York Open, the London Open, etc. to get a confirmation. And timing is very, very important in trading. Very, very important, especially in Forex and in other features in the market right now. Let's look at Bitcoin. What's happening here? So again, for Bitcoin, same thing. We need to create a higher high. This will confirm a lot of things right now. This is the most important level right now for Bitcoin. The 22.6, right? If we break that and we come back down to fill up this imbalance, then this is a beautiful area to go back long at 21.3.5, 21.4 with a very, very tight stop loss, right? However, if you want to be sure, then look at this range right here. And let's go to the 4 hourly. Look at this beautiful indecisive candle right here. This is a beautiful order block. Then we'll go along here. If you do not tend to create a higher high, then obviously we can just go down straight away and see lower prices from there, right? Again, looking on the higher time frame, we know that Bitcoin is looking extremely, extremely similar towards the previous area, right? We saw lower low, lower high, higher low, higher high, higher low, lower high, dump. Right now, same thing. Inefficiency, lower low, higher high, higher low, higher high, higher low. Now the question will be, are we going to create a higher high or a lower high? If you're creating a lower high, I expect lower prices. One more time. What would be the target if you do dump? Well, I would look at the 16,000, something around this area. Which is this range right here. Let's hope we don't go there, but it could definitely be the case. However, if you just now break this area right here, create a massive higher high right here, to then come back down, then we can look for potential long opportunities to go long. Depending where we at in the market. Why not here? Well, clearly, because of this area of imbalance right here. So you should wait for a confirmation entry on the lower time frame right here, to then come back up, to then go down. If we do not come back down anymore. Sergio Colaone says great breakdown. Thank you, brother. I love you, man. Thank you. Again, guys, if you don't know exactly how these imbalances are working, imbalances are these gaps, right? Whenever a candle right here is not connecting towards another candle, we cause imbalance in the market. Use this tool. This is an indicator. It's called imbalanced zone. Frozone is the creator of this indicator. It shows you exactly the imbalance that needs to get filled. Imbalances tend to get filled over time. Do you trade gold? So yes, I do trade gold. However, yeah, I'm waiting for a position right now. Imbalance here. Higher high here, which is a very good sign. A beautiful order block here. I would go for a long here. However, I would literally go to the 1 minute to confirm this trend. Maybe at the 5 minutes here. Once we're down, I look for a 5 minute confirmation entry. Again, the way it works. Let's say we come back down now. What we want to see. Okay, let's see. Let's say we come back down. Right here, we tap into this high. We then create another high, causing a change of character on the lower time frame. Now we're at the 5 minutes, right? Boom, come back down. Then we are drawing the fib levels from this low to this retracement zone. We look for an area of demand under the equilibrium, which is the 50% and lower, right? Let's say it's right here. We go in here. Look for a beautiful entry right there to then go target this area of supply. I mean, it could be a bit bigger. It totally depends on the order block, right? Could be this size as well, 10 to 1. So wait for confirmation for sure. For how long are we streaming already, guys? Almost 4 hours. Wow. Time is flying. Time is flying with you guys. Well, no wonder. Very exciting. So yeah, the euro is the euro Japanese yen is definitely going up right now. Of course, to fill up this imbalance right here. So this could be a beautiful area. I'm very looking forward to this range. Again, also a beautiful area right here. So keep that in mind. Again, I will share everything in my Discord channel. You guys can join for free, right? And I really want you guys to share your setups in here, right? All your Forex setups, you can share it in here. All your crypto setups as well. So we can go over it. We can discuss them on a daily basis, right? We can, you know, give each other feedback and so on. There are a few really good traders in here. And yeah, let's make sure we all become amazing traders from there. I put all my charts in here personally. Whenever I enter a position, I immediately let you know right here in the chart. Also, I announce all my new live streams, my, you know, the exact dates, you know, when I'm entering the London session, when I'm going for a live stream for the New York session, etc. I'll announce when I go live. The complete package right there. Okay, guys. I'm gonna go very, very soon. I really quick want to go over a few charts with you guys to explain you guys where I'm looking at right now. So you guys can take this in consideration. Keep in mind we're close to an entry for the Nasdaq. For potentially the euro against the Japanese yen. For potentially GJ. And that's it for now. So okay, let's have a look at the euro against the Japanese yen. Well, clearly everything is aligning perfectly right here. So what you see here clearly is a beautiful area of consolidation, expansion, retracement. Inducing early shorters to go long. These people are liquidated right now. So we expect price to come, tap into the supply zone to potentially go for lower targets right there. Target could be somewhere around this range. Most likely this area right here. Alright? I will let you guys know. I will update you guys in the Discord channel as well. So this is EJ. Then we have the Nasdaq. Again, we wait for the New York Open first before we do anything. We do not want to get stopped out purely based on a manipulation or any liquidity sweeps whatsoever. Therefore, we wait for the New York Open to see what it does. If the New York Open has been done, right, and we're still under this area, then I will definitely go short here to enter this position right there, using this as a take profit right here. This area of demand has been touched multiple times already. It's a very high likelihood of demand. Also, again, liquidity underneath this range. So keep that in mind, okay? So this is the US 100. Be very careful here though. Right, we still have an area of imbalance here. So what do? I just wait for the New York Open first. Okay? I really like this area. The reason why is because there's liquidity build up here. And the supply zone has never been touched yet. It's an untouched supply zone. And yeah, I believe we look extremely oversold already. Especially on the 1 hourly. Look at that. We haven't seen these prices in a very, very long time. Okay? So this is the Nasdaq. And then we have GJ, guys. Again, GJ, exactly the same rules as the Nasdaq right here. We're seeing massive pool of liquidity right here. It just has been taken out, like expected. Then we of course have this beautiful area of consolidation here, in combination with a beautiful area of supply. I believe it's on the 1 hourly. Yeah, it's a 1 hour supply. Tap into this area to then come back down. However, again, wait for the New York Open right now. So if it happens before, we do not enter the trade. Okay? Because if it happens and we're here right now and you want to enter and then the New York Open is there, then guess what's happening? Volume kicks in, boom, wicks you out and then comes back down. We don't want that. We want to make sure the New York Open has been there before. Okay? Very beautiful setup as well. So these are the setups I'm looking at right now. There are way more setups we have to take in consideration. However, for now, I think these are the most important setups to look out for, okay? So whenever something happens, I will update you guys in the charts as well. And on Discord. And yeah, thank you for watching, guys. Have a very, very beautiful day. And yeah, see you in Discord. See you tomorrow on the live stream as well. Tomorrow probably again the London session or the New York session. I will let you know like an hour or two before. So much love, guys. Thank you for watching. Peace, and I'll see you tomorrow. Bye bye.